What differentiates NIO stock compared to all the other EV manufacturers, in my opinion, has always been the battery swap infrastructure. The fact that you could drive in a battery swap station, change your battery in like 3 or 4 minutes, and there you're good to go. And the additional options that you could always, for the longer road trips, change to a longer range battery and so on. So there's a lot of additional value out there. But I think the reality has catched up with the NIO management, and we can see here, and this is something that I've been talked about over the past year or 2 years. NIO spent too much money on the battery swap infrastructure on the back of not having enough customers. So let's look at the actual numbers, like how many battery stations do they have and what is the utilization rate before we start to criticize the management. So you can see I have like a little bit of a table, especially from 2025. I have all-time number of swaps on the column B. Let me zoom in a little bit so you see more. So we have the number of swaps of all time, and it goes up with a couple million every month. We also up the number of swap stations. This is the problem that I've had with NIO. They build out too many swap stations, and some of you might comment that in the later stages they're getting a lot of like subsidies from local governments and partnerships, and that is true. The cost per station for NIO is much lower than it was a year ago or 2 years ago, but they still burnt a lot of cash on building up these stations. And the question is, given the fleet size, is this warranted? Like, could they get by spending much less money on the swap infrastructure? So look at for example, the average daily swaps. It's been between 90 to, in best case, 100,000. Currently it's at 88,000 a day, right? It's barely up from November of last year. In fact, in November of last year and December of last year, they had 87,000. Currently, according to the closest, most detailed information from this gentleman on NeoSwap on Twitter, you can see that last month, let's go to the last 30 days, you can see here 88,000. And that's quite similar to my own calculations. Obviously, this guy is more accurate, he's really focusing on that, but I'm also doing somewhat of a similar calculations, and we are arriving at the same number. So at 88,000 swaps, we can see that the number of average swaps per station sits around, let's say, high 20s and very low 30s, which is half of the break-even number. So we mentioned the break-even number of 60. That number is a couple of years old. Since then, the lithium carbonate price has been going down. This helps the cost of the battery. The batteries actually, like the actual batteries in each swap station. We also know that the scale has gone up. So would I be surprised if the actual break-even number is lower now? I don't know, like let's say 45, 55, we don't know. No one knows, but it should most likely should be lower. The problem for NIOs, though, in my opinion, is not that. The problem is that they're still spending roughly, they're making roughly 1,000 swap station per year. That was a recent target that they mentioned, like half a year ago or so. If you assume $500,000 cost, $500,000 each, times 1,000, you got already 500 million. If you go to, let's say, 1,000,000 each, that's 1 billion annually, right? For a company that is in a very dire position. And the question is the demand actually demanding NIO to build out this swap infrastructure? And the simple answer is absolutely no. I don't care what someone else says. Like, look at the average daily swaps. They're still averaging roughly 90 to 85,000 daily swaps over the past 6 months or so. In fact, over the past 9 months, you could argue. So that is barely up over the last 8 to 9 months. And they're still like build out the number of swap stations from January. I mean, at the early this year, we were at around 3,000. We are already up to 3,345. So that's a 10% increase over this first 6 months of the year, right? And we can see that each station of the new generation can handle up to 480 swaps a day. And I'm not joking, like look at that, 480 swaps a day, and the average swaps per station is currently at around 30. I mean, that's just like, why would you need this many stations? I've been saying that and I'm saying it again. This management has lost the plot over the past couple of years. Now, there are some good stuff happening, but it's also a little bit of saddening. Like, remember that all of us invested in NIO. I mean, why didn't we invest all of our money in Tesla or XPeng? Because a lot of us believed in this battery swap infrastructure. That was like the golden crown. That was the whole idea of NIO, in the ability to change your batteries, to buy a car now. And as time goes on, like 3-4 years later, with the new battery technology available, you could essentially, in a much cheaper way, upgrade your car to a completely new battery, right? No one else offered that. But look at these latest discussions, like CATL in talks to buy controlling stake in NEO Power. I mean, if you asked any NEO investor 2 years ago, even a year ago or 3 years ago, what would you think most of us would have thought? I mean, no one would. If you would have told us that they are in discussion about selling some majority stakes or at least controlling stake of NEO battery infrastructure, a lot of us would say that that is a miscalculations from the management, and that is the honest truth. Like, do you think that William Lee planned to sell off NEO Power? Of course not. This is just like they are forced to do this. This is a complete and utter sign of weakness. They are forced to do this. And there's also another report here, like, how they're gonna cut costs. That is a good one, but I was thinking more of this one. In talks to buy potential with potential buyer to sell stake in key asset. What could that asset be? Well, we all have our guesses, but I guess we know. Then there's also some other obviously discussions. We know that he's talking about Q4 profitability, but I actually like this comment here. Someone is criticizing the CEO there, like same as the 20k ET5 a month. Remember that? Like maybe 2 or 3 years ago, he mentioned that, we're gonna sell 20,000 ET5s a month. Then it was 20,000 onwards a month, right? Just like half a year ago. Or the 440,000, as he mentions here, cars in 2025, and we are not gonna reach that at the current stage. Most likely we're gonna get back to 350, in best case 400. So it's not to say that everything is bleak and bad, but again, don't trust this management. They talk a lot, but they rarely walk the walk, right? Then there's obviously some other good stuff, that there's been a lot of discussions over the past couple of weeks about Chinese government involvement, in which they're gonna try to stabilize the price, the price cutting and the price war that is currently ongoing in trying to help stabilize the EV market. I think this is good in the long term. So that's at least a good sign for NEO. And again, let's not forget the lithium carbonate price seems to just continue to go down week after week. So there are some good stuff happening. NEO sales will obviously increase over this coming quarter in Q2 and also in Q3. In fact, if you look at the expected deliveries, we can see that even my own expectations is that in June they will have at least 28,000 deliveries. Hopefully we see a sharper increase in July. You can see those numbers again in the white or in the gray part of the graph, which represents 2025 compared to the 2 previous years, blue 24 and green 2023. So there's some good stuff going on. We know again cutting the cost is good. Let's look quickly at the number that we got on the earnings. We can see that they actually managed to finally do some significant cutting in the places where we needed them. We can see that the R&D expenses went from almost $500 million in Q4 last year to 438 million. So that is a good healthy 60 million decrease, like really significant one, actually 12% quarter over quarter. So I really like that. They also have targets for the research and development expense and SGA as percentage of the revenue. So I'm quite happy with those targets. If they fulfill that, we could see profitability already like by Q2 of 2026, so it's less than a year there. But again, this is like buts and ifs. Like, you never ever should trust this management. They burn so many bridges with the investor community. And my main idea with this video was to show you that this is for sure, in my opinion. I mean, I would love to see your point of view, but in my honest opinion, this is a sign of weakness. Like, nowhere in my mind would I expected that like if you asked me 3 years ago that NEO would sell potentially a huge chunk of their business when it comes to the swap infrastructure or the battery storage or whatever you would call it, like, which is most likely gonna happen because they simply burnt too much cash over this past 2 or 3 years. They had too many different brands, too many like inefficiencies, too much spending on R&D and SG&A. Remember that NEO has always been bloated. They, on average, over the past 2 or 3 years, spend between 2 to 3, sometimes four times more than, for example, Tesla or XPeng spend on their R&D per number of cars sold or their sales per number of cars sold. So they've been extremely bloated. They have too many models. They are just doing too much. Now, are they also having, like, let's not forget that NEO's had amazingly quality cars. They're doing great cars in terms of quality. They're self-driving. I think the New World model or whatever it's called, NVN, that one looks really promising. And again, it's just, in my opinion, the big issue for me with NEO is the management. Like, if I was honest, I think NEO, you might not like what I'm gonna say now, but I think NEO would be much, much better off with a serious CEO that has some kind of control, some kind of higher level understanding on what to spend money on. You cannot have like 12 cars or 15 different models for a company that last year sold 200,000 cars. I mean, let's look at it this way. So they sold, like, if I recall, I don't have the numbers in my head, roughly 222,000 cars they sold last year, divided by 15 models. It means that on average they sold 14,800 cars for each model on average last year. That is less than, or essentially 1,000 cars a month. And that's not the enough volume at these price ranges. Sure, if you would have sold like 1,000 McLarens or Bentleys, sure, they would probably make a ton of money, but they're not doing that. Sure, they are selling more expensive cars than Xpeng or Tesla, but still, it's not in those price ranges in which you could have like 1,000 or 1,200 sales a month on average across your fleet and expect to be like making money. And the reality is obviously the earnings that we have been seeing over the past couple of years, they just like burnt money like quarter after quarter after quarter. And the result of that is just this like utter disastrous performance of the stock over the past year. But also obviously if you look especially from the peaks of 2021, I mean, it's just like, it's not even fun to look. I mean, the amount of retail investors, including myself and a lot of people that I know that lost money on this company, is just absolutely bizarre. But in any case, despite all of this negativity, they could turn this around if like William Lee actually for once does what he's supposed to do. Like if he for once in his life actually try to make the company lean, there's still the actual reality is that there's still time to save this company. Sure, the retail investors that have been like holding the bags over the past couple of years, maybe 4 years, are gonna like we're gonna need a whole lot of upswing in the stock price in order to become break even at the bare minimum, and let alone the opportunity cost, you know, the amount of years that we've been like sitting on this bad hand and we could have made money on a lot of other stocks. So there's also that. But yeah, so I would still say, like, if you just look from neutral perspective, do I think NIO is doomed? Absolutely not. But like they are getting close to getting doomed if the management doesn't actually execute on all of these promises. It is now or never. I don't care what everyone says, like this is the last chance for NIO, and I don't think they can afford to dilute shareholders much longer. Like the stock price like is just like, I mean, look at the market cap, 77.8 billion. Like what are they gonna do? Like they're gonna raise another 10, let's say 1 billion, right? 1 billion, that's a dilution of like what, 15% or something like that. It's just gonna crush the shareholders yet again. So they need to, like now, yesterday, or like last year or 2 years ago, start to cutting costs and stop all this number of madness level of cars. We don't need like 15 different cars. Go back to maybe 10 models. Yeah, 10 models should be enough. Like two or three Onvo maximum, 2 or 3 Firefly, and maybe 6 NIO models. Like you don't need different derivatives of each car. Just focus on a few ones. I mean, Tesla is selling, look at, I've been criticizing Tesla over the past couple of years, but if you look at Tesla sales last week, look at the weekly insurance numbers, and this graph shows you that Tesla in the blue and NIO in the red. Actually, if you look at the entire year, just compare Tesla to the NIO, you can see that all of those red bars for NIO is across their 10 or 15 models, and all of the Tesla blue numbers are coming from 2 cars, Model Y and Model 3 essentially. So it just doesn't make sense. I mean, if you wonder why Tesla has so much higher margins than NIO, obviously until now, they also have some issues now currently, but if you look over the past 3 or 4 years, one of the reasons is just they are so much more lean and efficient. But in any case, the main topic of the video was to look at the sad reality that what we all believed about the NIO power swap infrastructure, they might have to sell it, and this is not because of some unlucky stuff happening. This is because the mismanagement from the CEO. I mean, I don't know if you even can call it like the company being managed. I mean, they've been set up to be destroyed in terms of the shareholder value because of their actions. But in any way, this was my few cents on this video. Please like and comment in the comment section, and thank you for your time, and see you in the next one.